Welcome back. U.S. derivatives exchange CME Group and the index provider Silicon Data are teaming up to create a futures market for compute. We're joined now by Terry Duffy. He's the chair and CEO of the CME Group. Terry, it's great to see you again. Welcome.
Thanks, Kelly. Appreciate it very much.
There's a whole macro strand of this, which is that you guys are formalizing an argument that compute is a commodity, and we all have to think about the Big Seven and the Mag Seven as commodity producers and maybe rate them as such. Let's leave that, put that out there and put it totally to the side while you explain why the cost of compute has become one of the most important data points in the land and what you are now going to offer around it.
Well, when you look at the cost of compute, Kelly, I mean, it's amazing. So to even buy some of these, the GPU components is so expensive. So all these hyperscalers buy them, they put them in data centers, and people go in there and they use them, for lack of a better term, on a one-off basis, and they rent them, which makes it much more efficient to continue to build your own AI project. But the problem with that is there's been no risk management tools for either the hyperscalers who are holding these very expensive GPUs. There are new GPUs coming out all the time. They have to keep up with the demand from the people who want to build new AI projects. And so we believe that there's a market there, a natural buyer, which would be the people that are creating the new AI projects, and then, of course, the people that are holding these GPUs and leasing them out. So we think that is a natural buyer, natural seller, and that'll make a great market going forward and mitigate some of the risk for both sides of the equation. This is something that's not going away. We all know artificial intelligence. You talk about it on your show all the time, Kelly. The different stocks that are involved, whether it's in chips and software, your last argument that you had with the analyst. I mean, this is continuing to proliferate into our society. So we want to make sure that we are offering the marketplace a risk management tool. And I think Don Wilson and the folks at DRW and the folks at Silicon Valley with Carmen Lee have really come up with a unique proposal. And we're working together to create these futures contracts that we can help mitigate risk for many years to come.
Terry, how important is pricing transparency in what has been arguably a pretty non-transparent market for 99.9% of people?
Well, I think that's a really good question, Brian. As we're getting through this right now, I've looked at some of the charts, talked to Don a little bit about that, and we've seen some of the pricing on the rental. I assume that's what you're talking about, on the rental of some of these GPUs. And they can be very stagnant, go lower, and all of a sudden you'll have a massive spike with a new innovation coming out. So I think the transparency of pricing is good on any product, Brian. So I think this is something that has gotten so big in the world that we live in, that transparency will help both the people that are creating the products, as I said earlier, on AI, and the people that are going to sell the products to these folks. So Terry, it's really important.
Talk about literally how, please, how this is all going to work in terms of, forwards and futures and all sorts of different settlement contracts. And this also, we always refer to kind of the benchmark H100 rental data. Would you be looking to add anything else to the suite?
Well, and that's the beauty of it, Kelly. I think working with Silicon Data, we will have the ability to be nimble and to put up new products up there, new indices going forward. Say NVIDIA comes out with a new chip, and all of a sudden it's the latest and greatest. And so you need to have those GPUs out there. They have the data on their indices to go ahead and we can list a new futures contract for them in a short order. So we think it's really an exciting time because of what Silicon Data has been able to accumulate today and what they will be able to accumulate going forward in order for us to list new futures contracts quite quickly, depending on what the world needs at that given moment in time.
How would you compare and contrast it to the typical kinds of commodities that that are most heavily exchanged now, and their sort of arrival onto the scene? Is this a big break from the past in that sense, or is it, just continuous with things like, go ahead?
That's a great question, Kelly. And, you try to get your arms around this as the world continues to evolve. I don't know if there's a product that's been out there listed on an exchange that remotely comes close to this. I mean, you can say there's some characteristics between any product and this, but this is so different. We've had such a concentration of risk in the AI world and in the software world versus some of the other commoditized products that we list on CME today, where they're dispersed amongst many different participants. So I think this is a different product which will allow it into more hands. So it's a little bit different, Kelly. So I don't know if I have a good analogy to say what it's like on an existing tradable product today.